Kunal, hi. Would you like to share with us your tips for a market which, like you said yesterday itself, is poised for a bit of a consolidation? Which are the stocks that stand out for you from a high risk or low risk standpoint?
So I'll suggest a couple of high risk trades over here, Karnya, and good morning first of all. So I for one believe that the markets are now going in for a decent correction or a consolidation from current levels. So you can look at the sudden halt to the pace of the market rally. I think that's an evidence enough that this halt towards the pace could either result into the indices going into a slight bit of a time correction. By slight bit, I mean at least for the next 1 week or they can go through a price based correction, and that I think we can keep on reviewing on a regular basis. So in that light, I would suggest two sell calls. The first one is a sell on Kotak Bank. Now yes, the stock has done exceptionally well. It's very close towards its all time high levels, but then when I look at the pure weight of evidence of the indicators, whether it's RSIs, whether it's the other momentum indicators on the short term time frame, it indicates that the stock has entered into the overbought kind of territories, and it could warrant some sort of a cool off over here. So would suggest a sell on Kotak Bank. Targets of 1720. Stop loss could be kept at 1820, which is approximately yesterday's high. The second is a sell on Hindustan Petroleum. The stock again has done pretty well for itself. In last 10 days, it's recovered from 170 levels to almost a 210, 215, where it's trading currently. So Hindustan Petroleum, HPCL is also a sell. I would expect the stock to correct and come back towards at least a 205, 206 kind of a territory. Stop loss could be kept at 220 on the sell call.
Okay, those were Kunal's picks. And how about you, Raghavendra? What's catching your eye this morning? High risk and low risk for our viewers.
Good morning. Let me first start with the low risk, low reward idea, that is Supreme Industries. Supreme Industries has a history of wealth creation, and we believe that this would continue in the months ahead. This company is extremely good in terms of corporate governance, and its debt-free position makes it a portfolio stock. The recent COVID pandemic, earlier the demonetization, the GST implementation, all these developments have dented or negatively impacted the smaller or unorganized players, which has led to a margin gain or a market share gain for Supreme Industries. So we believe that this would continue. We expect the full year EPS of Supreme Industries to be 50, giving a PE multiple of 36 and a target of 1800 from current levels. So that is a 30% upside for Supreme Industries as our low risk recommendation. Moving on to an high risk, high reward idea, we have HG Infra Engineering. The stock currently trades at 186 and we have a 50% upside target at 270. This is a capital intensive business of construction and infrastructure development, and the promoter holding of 74% in this capital intensive business is very comforting to us. From 2015 year, the company has emerged and graduated from a Rajasthan-based subcontractor in 2020 to a pan-India based infrastructure developer. In 2015 year, the order book of the company was just 1000 crore rupees and currently stands at 6500 crores. So that is a 6-time growth in the last 5 years for HG Infra on the order book. They have a very good revenue mix of 80% EPC and 20% HAM projects, which would continue in the quarters ahead. So that would be a 50% upside from current levels on HG Infra to buy at 186 for a target of 270. That is a 50% upside in 1 to 1.5 year from here on as a high risk, high reward idea.